In the currency quadrant, the euro currency, the March euro currency, reaches a 6-week low but manages a positive close at the end of today. Volume was fair and the euro still remains 2.33% lower than its recent high close on December 27th of last year. On the low today, 108.34 half, that was down 22 basis points or 0.2%. On the high, 109.09, that was up 47 basis points or just short of a half of 1%. We finished the session up about 0.2%. Now, on a weekly basis, the euro has just completed its third down week in the last 4 and is likely to finish the month of January down as well, as it currently sits down about 1.77% for the month. Now, recent German data has a little bit to do with the weakness I've just discussed. German consumer confidence came in at minus 29.7, which was worse than forecast and worse than expected. And that's on top of Germany's IFO business climate for January, which was released the day before, which was also worse than forecast and worse than expected at 85.2. Now, Germany is the manufacturing engine of the EU, and therefore its data has the largest effect on the euro and the EU data. Also, we had President Lagarde yesterday, ECB President Christine Lagarde, of course, and she pushed back on market expectations for rate cuts. In her press conference, she said the rate cut debate is premature, but still overall sounded more dovish than hawkish. And speaking of central banks, next week we have an FOMC meeting, and obviously the largest pair traded is euro-US dollar. So if there's anything odd about that FOMC meeting, you could see a big move in the euro. We also have a Bank of England meeting, and that can also affect the euro simply because that pair is traded quite a bit. So watch those two Fed meetings, or I should say central bank meetings next week as well.